It's about that time of day again. My name is Joseph. Monday evening, January 29th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and of course we can't forget about the mighty euro this evening. Crude oil starting off tonight is range bound, and I'm looking for buying opportunities going back up to retest the highs from last week. The S&P is bearish, and I'm watching for channel rotation to see which channel we're going to use for tomorrow. Speaking of tomorrow, Nasdaq is bullish, but double tops and double bottoms around the big round number at 7,000 tells me to look for traps and failures using a measured pullback tomorrow. Gold is bearish, head of contract rollover, and I'm watching for a hidden channel for selling opportunities up near the highs tomorrow morning. The euro is also bearish and trying to rotate back down to the low of a bear channel, but a recent bull spike tells me to stay patient and wait for the buyers after a second leg higher tomorrow. We'll get a great newsletter in store for you guys and gals tonight. We got plenty of reliable trading opportunities setting up for Tuesday's session. We got FOMC, we have rollover, we have hidden channels, we got measured pullbacks. We have everything to talk about here tonight. And of course, I'm going to put it all together in just a few moments. Before we jump in and put the plan together for Tuesday's session, I got a lot to cover here tonight. I want to remind you, if you're on YouTube right now, make sure you subscribe to that YouTube channel. Give me a thumbs up if you find value in the video here tonight. And don't forget to post any questions in the comments section below. And if you really want to stay in tune with everything we do here at School of Trade, head in the description of the YouTube video, head over here to the blog at sidewaysmarkets.com, and make sure you join our mailing list. Join the mailing list, and I'll send you an email every evening. We post anything new here at Sideways Markets. And don't forget, while you're here, don't forget, follow me on social. I'm always posting exclusive content that you won't see anywhere else on my stock twits, Twitter, Facebook, and LinkedIn feeds, right? Follow those lower left-hand corner. And speaking of charts tonight, right, all the charts from tonight's video, how easy is that? You can grab all the charts from tonight's video right where it says click here to download today's charts. How easy is that? Grab all the charts in the video tonight and have them ready for your trading day tomorrow. And then speaking of tomorrow, what are you waiting for? Grab that free pass. Come out and join me this week as a guest on a free pass. I can guarantee you'll learn more with me on that free pass than you will anywhere else on the interwebs. I can guarantee you that. And don't forget, if you have any questions on the video tonight, drop me a comment below the video on the YouTube channel. All right, let's jump right in. We got a lot to cover here for tonight. Jumping into the economic news calendar here for tomorrow, we're starting to get the end of the month coming around, right? It's that time of the month again. As we start getting the end of the month, what are some of the key components as we go into the last 2 days of the month this week? The first one, and we talked about this right last week, if you recall, the first one is as we go into the end of the month, we start watching those prior month open, high, low, close levels, right? Now those prior month open, high, low, close levels. We talked about this last Thursday night because we were going to use the prior week levels on Friday's session. Well, now here we are going into the end of the month, right? End of the month, same thing. We'll start watching last month's open, high, low, close levels. And we get some great opportunities to capitalize on these on the euro and gold. So stay tuned for that a little bit later on in this newsletter video. The second thing is volatility, right? Volatility usually kicks up a few notches around the end of the month. And it's a psychological thing, really. A lot of experienced traders, they know the volatility kicks up at the end of the month, so they start to dial back their position, right? So volume drops a little bit as the end of the month, but that volume is more than made up for by gamblers that enter the market. These are traders who have already made money this month, and they're all loosey-goosey on their rules. And then you've got traders who have lost a lot of money this month, and this is their last few attempts these next 2 days to make it all back. So when you combine lower volume with experienced traders shying away, right, with the overall aggressiveness of traders who are either way up or way down on the month, you get a crazy cocktail, right, that is dangerous as we get into the afternoon sessions. So as we go into the end of the month, I want you to really promise me you'll be very careful with your capital because, again, we've got that lower volume, right, combined with higher volatility, we oftentimes get some very unpredictable, unexpected, and, frankly, dangerous moves if you're trying to trade them in low volume times like the overnight or the afternoon session. So be careful. My best recommendation is follow my plan every day, which is to trade that sweet spot. Get in early and get out early, right? Anything in the afternoon session, anything in the evening, you really got to be careful. Don't trade too big of size. Not the time of the month, right, to be taking on big unexpected or unnecessary risks, right? Let's keep it close to the vest. Let's keep the money we've made already this month, right, and finish up the month on a good note and go into the month of February. Now, another reason why you got to be careful as we go into the end of the month is because we've got FOMC coming at you. Not tomorrow, right? Tomorrow the meeting begins, but this 2-day meeting will culminate on Wednesday afternoon with the FOMC announcement. That's another big thing you want to keep in mind for this week. Now, what does that mean for tomorrow? Honestly, it's a little bit tough to tell. Today, we saw what felt like some really kind of sleepy markets, and it felt like maybe they were kind of waiting to see what the Fed said on Wednesday afternoon. I'll tell you, though, normally, Monday and early Tuesday aren't really affected by the FOMC announcement, but today we definitely saw, we saw gold was pretty slow today. Everything was relatively slow. It moved, but it was relatively slow. It felt like the markets had something they were waiting on today. I've been watching charts enough. You begin to pick up on those little nuances. So tomorrow could be a relatively slow day ahead of that big announcement on Wednesday. Historically speaking, though, the Tuesday before the announcement, right, you wouldn't even know the announcement was coming. We'll see how tomorrow's price action looks. If it's real slow tomorrow, you know what they're waiting for. They're waiting for that big announcement, right? One of the last meetings with Janet Yellen at the helm here, right? Because we have, of course, her replacement waiting to come in behind her. So again, look at this tomorrow. We'll know more tomorrow morning as the personality, right? The personality will tell us more tomorrow based on how we want to approach this. I hope it moves great tomorrow. Hope it's a great day tomorrow. But of course, again, if it is relatively slow, we know that combination of end of the month lower volume and anticipation of a big announcement on Wednesday may slow things down tomorrow, right? So use your head, right? If you see it slow tomorrow, right, don't force it. You know what they're waiting for. Now, another thing for tomorrow, we got rollover on gold tomorrow. Just a heads up on that. The official rollover on gold is the 31st. We'll talk about that in a moment. What else here? I am not going to be here tomorrow night on the newsletter. So there'll be no newsletter tomorrow night. I want to make sure I point that out as well. I'm going to be stuck in some end of the month meetings all day tomorrow and then coming back late on Wednesday. I should be able to get that newsletter out for Wednesday night. So I always hate to miss you guys on the newsletter. I'm pretty good at being here most days though, but no newsletter tomorrow night. I'll be back for the normal schedule on Wednesday and Thursday. And then, now that we get that off our chest, let's take a look at the schedule here for tomorrow. There's no major news in the overnight Asian session, so nothing to worry about there. We get the GDP flash, right, from France at 1:30. I don't expect that to be much of a market-moving event. Then we go down to the big news of the London session tomorrow. We got the economic sentiment and the GDP number, both at 5 a.m. Eastern Time. Keep your eyes open on that tomorrow if you're trading the overnight London session. And then if you're joining us tomorrow, 8 o'clock Eastern Time, don't forget, there's nothing there. We got 9 o'clock Case-Shiller, 10 o'clock consumer confidence. Nothing to worry about for tomorrow, right, in the U.S. morning session. And then tomorrow night, right, we get some news from Asia, obviously Australia there as well. So keep an eye on that if you plan on trading the overnight Asian session, right, going into Wednesday. So really the only major news for tomorrow is really just that economic number, right? Economic sentiment and GDP number at 5 o'clock Eastern Time for London traders. There's really not much to worry about tomorrow, right, in the U.S. morning session. And then, of course, you got tomorrow night going into Wednesday's overnight Asian session. So rollover on gold, FOMC on Wednesday, end of the month, right? Don't forget the plan, right? And again, don't forget, we'll be in our trade room every morning, 8 o'clock Eastern Time, trading the plan together. Let's jump right in here right now into charts. Now that we know what to expect here into the end of the month, let's put this plan together here. How about some oil first? We'll go oil S&P, Nasdaq, gold, and we can't forget about the mighty euro. Crude is trading in the middle of a large multi-session range or a multi-session triangle. And with such a strong reaction off the low, I'm anticipating another leg higher and buying opportunities on the way back up to retest the highs tomorrow. One thing I'm also watching for is some choppy price action right in the middle of this range. So if it does get stuck in the middle, we got to be aware of where we are, sit on hands, and look to fade the edges tomorrow morning, because the middle is always the hardest place to trade inside of a trading range. I think the easiest chart to look at here tonight on the oil is you got to slow it down a little bit. Here's a 30-minute chart here of oil. If I remove all of the prior open, high, low, close levels, you'll notice here we have a lower high, right? We have a higher low. If I put a moving average on here, the moving average will be right in the middle here right now. So as you can see here, right, we've rotated off the high, down to the low up to the high down to the low. We got a lot of evidence here, big wicks, big strong green candles, a lot of evidence here, right, that traders are kind of seeing this as a range. And of course, if we are rotating from the high down to the low to the high down to the low, we should be due for a move back down, right, to retest, back up, other direction, Joe, right, back up to retest that high. So basically at this point now, we're looking for one of two scenarios. We're looking for either the move higher so we can buy it on the way back up. Got to be careful though, because we're going to be right in the middle, right? So we might spend some time tomorrow kind of sitting there quiet like, right, in the middle, just because it is the middle of that range. Another option would be we see another leg lower here, and with that, we'll use the 2-try rule, right, and look for buying opportunities going back up into that range. So those are basically the two basic strategies for tomorrow, right? If we get that chart back off there, now you can see where we are, right? I've got kind of the highs of that range right there, right, kind of the lows of that range right there. I like this a little better as a triangle, trending off the high, trending off the low, right? Of course, here's your middle, and we don't really know what to expect in the middle here yet. What we do know though is I want to buy off that low, right? I want to buy off that low. I want to sell off that high. It's pretty easy to see. If we go back to that chart here, it's pretty easy to see here. We definitely have a bull bias, right, into that trading range. So if I had to choose long or short, I would definitely choose long, right, going back up to retest the high, or again, 1-try, 2-try, and then back up right into that range again for tomorrow. So as we look at this, there are really a couple big clues on this chart, right? One being this bear channel. Now, anytime we see a bear channel, I'm always expecting to see a two-legged pullback and a retest of that low. So there's definitely still potential for these bears, right, to find their way down, right, to at least testing that 64.91 low from last Friday, right, that big wick bottom that we saw from last Friday. So strong move down. Won't be surprised whatsoever if we see it, right, continue. Then again, 1-try, right, 2-try, and we'll look for this move going back up into that range, okay? That's one component. The second component, which I honestly think is the most important part of this chart, and that is this strong move coming off of the low. We always talk about this, right? What happens when we have a strong move in one direction? We pull back, and we almost always give it another leg going lower, right? Anytime we see, right? Look, strong move up, right? Pull back, another leg higher. Same thing, right? Same thing back and forth, right? Back and forth. Strong move down. They're probably going to retest that low and try to keep going, right? So here we have a real strong move higher. What is most likely is another leg higher. That fits right into, right, the plan for a rotation back up to retest those highs, right? So if we can get this strong move higher, then we can start looking for, hidden channel here. We can start looking for that resistance to be used as support, and we can look for the move going right back up again. The other really big concern, like I mentioned earlier, is we can expect sellers to want to sell off the high. We can expect buyers to want to buy off the low. In the middle of these ranges, they tend to get a little bit sloppy because there's no sellers coming in yet. There's no buyers coming in yet. The only people trading in there are people who don't know any better, right? And it usually can be a really sloppy, choppy area. Now, you'll notice, right, you look back in time here, that doesn't look very sloppy, right? So it may not be sloppy tomorrow, but again, you want to kind of be aware of where you are. And if you do start, if we come out tomorrow morning, it's 9 o'clock Eastern time, and this thing's snoozing, right? It's not going anywhere right around that 65.80, 65.90 area. We know what's going on, right? It's in the middle. So now that we know those three potential scenarios, right? One being, right, the move down off of this high, one try, two try, failure, break, and go from there, right? Back up inside that range. That would honestly be the ideal scenario for tomorrow. It would be a little bit confusing at first because it'll look really bearish, right? But at the same time, though, then you've got a potential here now where you can buy nice and low at support with a big target overhead. That will really be a nice opportunity tomorrow if we get it. The second scenario is going to be a little more difficult, right? We go higher here. Strong move up, right? We expect to see that second leg higher. With that second leg higher, now what I can do is take out that high, bring it down to that low, and I can look for a two-legged pullback to be a buyer. What normally happens is you normally get something like this where we can go up, back over. Think about that prior swing right there, right? And that ends up becoming, right, your buy there. Yes, it's in the middle, but again, we'll see how the personality looks like, right, tomorrow morning. Target, of course, now top of that channel, right? And then the big target here, remember our lucky number from last week? Right, that lucky number, 66, right? That's the lucky number for the bulls, that's for sure, right? Going back up to retest that high. The other thing I want to talk about too is if we do see it kind of going higher here, but it just kind of sits, right? If it sits right here, you got to stick. You really want to stick to the buy side, right? Because of that rotation, and so it'll be trap low, right? Back up, right? So that's the price starts going sideways here tomorrow. If it starts going sideways, though, be really careful not to try buying breakouts here because again, right? It's going to want to go up, trap high, right? And then back down here. So if we do start seeing this market, you don't want to buy that breakout, right? You don't want to buy that breakout because that could easily just trap high and then finish off that move that I was talking about before, right? So strong move down, retest, one try, two try, back inside that range, buy below the range, strong move to finish the move higher, find that hidden channel, mark up that swing, two-legged pullback, right, and finish off that move. If we can get back up to the high, one try, two try, and we'll look to sell this sucker right back down in. Remember, right, if we do see this market run higher here, don't just try to sell the high because anytime we see a real strong move, you know what's going to happen. It's going to pull back, try to do it again. That's called the two-try rule, and then we'll look for that collapse back down in. So just like this potential for it to happen here, right, it could easily happen, right? It could easily happen at those highs as well. All right, guys, good looking chart here on crude. We'll really got to wait tomorrow morning and see what the condition of the market looks like as we go back into the middle of that trading range. Now, how about some S&P? S&P definitely going to be on our radar ahead of the FOMC announcement. I love the S&P. I love the E-minis, but we definitely may see these things slow down here ahead of the FOMC announcement on Wednesday. So again, keep an eye on that. The S&P is bearish and recently retested the lows as the sellers tried to develop into a larger channel and reach a larger measured move target for tomorrow. We basically have three different channels to watch here on this chart. The first channel is already broken free and retested, right? This is the major channel from today's morning session. Strong bear channel, two-legged pullback, retest of the low, right? And you'll notice we're pretty much sitting right at that low right now. You know, I wouldn't say rejection, but I definitely wouldn't say acceptance, right? I definitely wouldn't say that the market has continued through that low aggressively, but I also wouldn't say that we've bounced off of that low either, right? Or else I would call this a range, and we'd be looking to, well, we still are looking to sell off the highs of that range, right? But we don't have that information just yet. So that's the first channel. The second channel is much larger, and I'm basically watching to see if they complete. if I take these highs, I draw this channel off the high, right? You'll notice, you'll notice, right? That lines up nicely here off of these wick lows. Now that could be a coincidence, right? But it's probably not, right? So that looks to be a channel. Now remember, there's one thing we always have to remember about a channel, especially a large channel like this. The bigger the channel, the easier they fail. The bigger the channel, the easier they fail. Basically now, we have to get back down to this low. I have to finish this rotation, right? I've got to get down to the low of that channel. Now, if we can get down to the low of that channel, then I want to start thinking, stay patient and wait for a sell at the high of that channel. Okay, so you can see why it's so important that if we see continuation down to the low of this larger channel, then I know exactly where I want to be selling tomorrow, right? Up around the high of that channel. Okay, but now you might be asking, well, what if we don't? What if we don't get down to the low of that channel, right? What if we can't? I'm glad you asked. That brings in the third channel. The third channel is a hidden channel. I'm going to take these two lows, just in case we don't continue. I'm going to pop them back up, right, to retest the high, right? So now this becomes kind of like a spike into a channel, right? Almost like a spike in channel, and now we know where we're looking from there. Okay, so again, 3 clues here. All 3 of them really tell you wait patiently for more information. First channel, strong channel down, 2-legged pullback, retest the low. We don't have enough information yet. We definitely don't have continuation through that low, and we definitely don't have rejection either. So we're kind of waiting to see where we go next. We do know, though, the sellers are well in control of this market right now because they retested that low. The next channel, right? Drop that high, drop that low. If we can continue this rotation down, finish off that rotation down to that low, now that tells me let's get back to those highs and let's sell off those highs. What if we can't get back down, right? What if we struggle going lower here? What if we pop higher here overnight? Well, if that's the case, let's mark up these 2 lows. Let's attach it to the highs, and that creates a hidden channel. And we're looking to sell off that hidden channel. So those, again, are the 3 different scenarios that we're looking for. Now, I would also toss in here to think about a possible range here too. We're seeing rejection off that high, or sorry, if we do see it go higher, now this becomes a strong move down, a pullback, and a retest of the low. If we see it bounce off that low, anybody who watches my newsletter, that's called a rejection, right? And what do we expect for rejection? Not a bull market yet, but a range. 1, 2, and back down we go from there. So boy, pretty much 4 different things, right? Well, I would say 3. If we don't keep going lower, that's going to give us a little bit more information we need, right, to plan from there. So now we know, right, if price goes up, we're watching this trend line here. If price goes up, we're watching this trading range here. If price goes down, everything then kind of shifts lower, right? If price goes down, then we start worrying about that channel there, right? And basically selling high, right? I can also see there's a large measured move, right? So in the event that we find ourselves kind of pinned to the downside tomorrow, this happens quite often, believe it or not, right? Strong move down to the measured move, and we end up going sideways down here. Right, so if we come in tomorrow, we've already, 9 o'clock, 9:15, 9:30 when the E-minis open up, and we've already slammed lower down to that measured move, right? If that's the case tomorrow, watch for a bit of a sideways range here, and if that's the case, 1 try, 2 try, sell back down, right? So we don't need to go back to the top of that channel, Joe. That's exactly right. If it bounces off of this low, then absolutely you know where it's trying to go. Right? If you're really quick, you might find some buying opportunities on the way up to the high there. But of course, I'll be looking to sell back down to that low tomorrow. Right? Maybe even a trap high above that swing 59 even. Okay, so that's the case if you get down to that low, right? But if it gets down to that low and it just keeps grinding, right? Stuck down here. right? If it's not getting off that low, right? If it looks like this thing is just is tied to a cinder block, right, and tossed into the Hudson, right, then you know that we are looking for, right, some sort of trap high, right, or something of that nature. You'll see it bounce off that channel low if it really wants to use it. If not, let it keep dragging lower and then trap, right, and we'll look to sell back up from there. Last but not least, how do we turn bullish tomorrow? What does a bull scenario look like tomorrow? 3 things, right? Strength, pullback, strength. I have no problem. Look what happened here, right? You can see it. Remember last Friday, the never-ending move last Friday? That was a hell of a move on Friday afternoon, that's for sure. All very low volume, of course, right? Almost untradeable, but a good, like I mentioned last Thursday night in the newsletter, hold those runners, right? Hold those runners into the close on Friday. You'll be fine. I wouldn't recommend taking trades on Friday afternoon, right? But hold that runner to the close, and you're good to go. What do we see here? Strong move down, pullback, strength. Once we start seeing that red candle through, you know this market's no longer bullish anymore. This is a bear market. Find that channel, find that 2-legged pullback, sell it right back down to retest the low, right? So how do we get a bull market now? Same thing, right? Same thing, but the opposite direction. Strength, pullback, and strength. I would imagine it'll probably have to be above the top of this channel. So strength, pullback, strength, get that moving average over. And don't forget, if we do get that strength, pullback, strength, it'll usually end up being a hidden channel. So wait for that hidden channel. It'll usually line up nicely with that prior swing there, right? So we'll use that tomorrow for a retest of that high, right, from what really was Sunday night, right, but it's really last Friday's session there. All right, we got some scenarios here to play for tomorrow. All eyes on the chart here for right now, and we're going to see where this baby takes us, right in the overnight session. How about some Nasdaq? Emini Nasdaq is bullish. We're definitely still bullish, but we're trading very sideways around this 7,000 round number. This range is a big clue. It tells me that buyers are rejecting the idea of buying at higher prices. So my goal is to focus on buying as low as possible using what we call the 2-try rule down below that range tomorrow morning. I'm also watching for a hidden channel coming off the highs, trying to use the low of this channel combined with, right, a measured pullback off the high, right? A measured move going against the trend is a measured pullback. All right, so that's the goal right now. The goal is to stay away from the middle, keep buying low, and try to leave a runner, right, up at the top of that range at the top of the big move, again, from late Sunday night. Most important clues here right now, a big, strong session on Friday. But you'll notice, right, they got this real nice strong move down, pull back, and they were trying to continue it like the S&P did. But what happened? They couldn't get anywhere, and price gets sucked back up at the big round number. Well, hey, now the buyers have a chance. Nice strong move up. Surely the buyers will go back and retest. No, they don't. They get dragged back down, right? And now we've got double tops here. Now we have double bottoms here. The moving average goes sideways, right? And we are definitely looking at a range. It's pretty easy to see, though. It's mighty bullish going into that trading range. Little bit of a bear move down, but I think right now it's safe to say we are cuddled up nice and warm, right, by the 7,000 fire right now. And I would imagine any pullbacks here are probably going to be seen as extra buying opportunities. Speaking of pullbacks, how about a measured pullback, right? 1 leg lower, up, 2 legs lower. Wouldn't that be a nice place, right, to be a buyer going back up to retest the high? And what I love about that measured pullback is the fact that it goes right into a prior trading range. Double tops, double bottoms, balance, right? Lots of price acceptance there. Heck, look left, and you can also see this is back inside a larger trading range here as well, right? So this is a really attractive area down around that 69, 60 area. Again, measured pullback. You know, my goal is to buy low, right? I want to get below this range, get below the range, right, and buy it nice and low, hold the target over the highs, leave a runner, right, back up to the big range highs, just below that 70, 50 even. So strong, right, strong bull market tells me 2-legged pullback and a retest of the high, but something's going wrong. What something? It's called a big round number. 7,000, it's a big psychological level. So we know, right, we know that initial 2-legged pullback didn't get prices low enough. That's basically what it tells us. Now that we have this higher high right here, we have to draw it like this. One leg, two leg, and so that is ultimately, right, our sweet spot for tomorrow. At the same time, if I take these highs, bring it off of that low, see that hidden channel we're looking for here now? That's another one, right? So now hopefully we can combine little trading range action, little measured, little measured pullback action, right? And that hidden channel all lining up, right, in a really nice area where we can buy below the range, where we have a little bit of risk and a big, big, big reward, right? Targets back up to the high of that range and a runner back up to retest the high. The only thing you got to be worried about tomorrow is this middle, right? You want to stay the heck away from that middle, right? We are allergic to the middle of these trading ranges. As I mentioned on crude oil earlier, it's not guaranteed to be real choppy, but when you look at this price action, you can definitely see lots of wicks, small bodies, flat moving average. This is a very different chart that we saw on oil, which was actively rotating back and forth. So what's the plan here for tomorrow? Plan's pretty easy. Anytime I have a trading range, I always look left and see, do I have a bias to this range? In this case, we do. It's bullish. Once I know that, then I know I want to buy below the low of that range. How do we do that? Well, I'd like to be a buyer using what we call the 2-try rule. 1 try for the sellers, 2 tries for the sellers. Make sure you see separation and significance. Those are 2 terms we talk about in our intermediate course. And then I'm going to be looking closely here to see those sellers fail and then get that back up into that range for tomorrow, right? That may take some patience because you have to wait for that first leg down, second leg down, 2 legs out, right? And then back in we go. Again, I'd love to incorporate that measured pullback. I'd love to incorporate, right, that channel low as well, right? So 2-try rule there. The other option here, and you'll notice we're rotating, right, from high down to low, low, right up to high, high, down to that low. We should want to go back up to retest the high. So what are our options right now? If it keeps going higher here, your number 1 priority is now to look for traps, right? Trap off that low. Stay away from the middle. One easy way to think about this is if you take a trading range, cut them into thirds, right? Buy the 1/3 below, right? Avoid the 1/3 in the middle, right? And of course, sell the 1/3 at the high, right? So it's a bull market going into that, bull market going into that range. So we're not going to try to sell the 1/3. I'd like to avoid the 1/3 where it says avoid, right? So if price ends up going up here, right, we want to try to get that market down, get it into that area here where I can buy that lower 1/3. Okay, it's not easy. Trust me, it's not easy. It's not very fun when the market's jamming higher here and you really can't do much with it, right? Get it down in that lower third, right, and buy from there. Then, if we go higher here, 1 try, 2 try, you can be somewhat aggressive if you want to sell off that high. Just make sure though that you keep that moving average underneath that trading range, right? So you'll notice the moving average has stayed below the ranges here. Yeah, you want to keep that up, right? You want that moving average. You want that moving average stay out inside that range. 1 try, 2 try, right? And then back in from there. That would be your sell, right? 1 try, 2 try, back into that range. Don't forget though, as I mentioned in this newsletter quite a bit, if you're going to go counter trend, you might want to go to a half size position, quarter size position, right? Something so that, right, you don't have to risk the full boat trade because again, you're going against, right, the momentum of this market. Also keep in mind too, if we can get that moving average up above that range, that will be potential for a buy. So if the moving average gets above the range, you really want to be careful trying to fade that top. You don't want to sell the high of that range if the moving average can successfully get above that range. And then if we can swing it, it all depends on what it looks like when it gets here. But the key is once we see that moving average up, 2-legged pullback, trap low. The reason why I like to look for a 2-legged pullback after this range breakout is because a lot of times we go up and we just collapse back into the range. In other words, that first pullback fails. So I always wait to see what the second pullback looks like. Usually that's nice and strong, right? After it comes back, 1, 2, and it's a pretty easy clue that you're getting that buy going up to that target. Obviously, target is back up to retest the high, and we'll look for acceptance or rejection, right, once we get there. How do we turn bearish? Strength, pullback, strength. We're going to have to go literally through the low, right, and then hold that pullback going lower. If we get it, right, if we get it, fine by me, right? Look for that hidden channel. Incorporate that prior swing, right? All those levels of resistance, and the bear target is headed down at that 69.01, right? So pretty interesting chart there on the Nasdaq. Looking for a measured pullback off the high here on the NQ. And now over to some markets that really have potential, right, to really make some good movement here for tomorrow. Over on gold, I'm going to wrap it tonight on the euro. I realize I'm taking up some time here of you guys, so I appreciate you sticking around and wrapping things up. First of all, on the gold, we do have a concern of a rollover here for tomorrow. As I'm recording right now, it does look like, this is just after the opening bell on the Globex session, it does look like the gold is rolling over here now to the 418 contract. So it should look, the 418 contract should look very similar to the 218 contract. You'll notice though the prices are a little bit off, right? In futures, you pay a premium for a longer term expiration, right? In my beginner classes, we talk about kind of how futures markets actually work. And the next front month usually has a higher price because of hedging purposes, right? Corporations want to hedge their exposure to cash, right? They pick up gold futures, or they have gold physical, right? They pick up gold futures, and they pay a premium for the ability to lock in that price, right, until the end of April now. Makes sense, right? It's a hedging game with futures. We don't use it for hedging as day traders, right? We're simply speculators here on the futures price. But it does look like we're looking at rollover here now for tomorrow's session. So tomorrow morning, well, chances are in the 418 contract, but it should look similar right to what we're seeing here right now. So gold is bearish and trading at the low of a multi-session channel, telling me to focus on selling opportunities up near the highs of this channel rather than trying to mess with these lows tomorrow. I'm always watching for a possible hidden channel, drawing off the lower lows and connecting up to the high, right, which will be used as resistance for selling opportunities tomorrow morning. It's also important to remember that we're watching for rollover tomorrow, right? So watch that 418 contract. And again, we'll put it together, right, tomorrow morning. It will likely be almost identical to this chart. Again, it'll be a little bit different, but it should have the basic same principles involved. What are some of the most important clues here right now? First of all is this really interesting multi-session channel. You can see they get a little bit wild on this one, right, on last Thursday's session. Right, this was the dollar talk, right? If you recall, I can't recall what crazy politician said something about the dollar, right? And of course, you know, gold goes and freaks out, right? Because they talk about the dollar, and so you can see they kind of whack-a-mole here above and below that range, that channel, and we're back inside the channel now. So you'll notice with that channel, you notice where we are, right? We're right down at the low of that channel. So I want to sell the high of that channel. Right? And as I mentioned a few times, I always like to see a two-legged pullback and sell just above the high of a bear channel. Okay, now we talked about this little trick a few times already. Take those lows, pin that baby up to the highs. That might be a coincidence there. You'll notice those two highs line up pretty nicely here, right? So that might end up being where we find that sell here for tomorrow as well, right? Almost like a spike and channel, right? So selling up off those highs here for tomorrow. Also, speaking of spike, right? That is a measuring spike, right? Anytime we see, and we talked about this last Thursday, right? Anytime we see a strong move like that, right? It's just like, it's the only thing you see, right? I mean, if you look at the chart, and I took everything off the chart right now, you go, whoa, what happened right there, right? So it's obvious everybody sees that. I mean, even on a daily chart, right, you see that big spike down. And so we want to look at that now as a measuring spike. So we have reason to believe that measured move at 33.1, you know, give or take a few ticks there, that will likely be a major milestone. And if we do get the measured move, we should get a bounce and do it again. You know, remember, one of the things that is nice about measured moves is that measured moves oftentimes produce that two-legged pullback, find that level of resistance, right, and then sell back down again, right? Just because we hit a measured move doesn't mean, right, doesn't mean it's automatically a bull market. So look for that, right, follow through from there. So the bear channel, right, the bear channel tells me look for that sell up at that high, right? Two-legged pullback looks pretty good for now. The hidden channel tells me don't be surprised if this thing gets some legs up here, and then we're looking for that failure back down from there. What else do we have here? The measured move, right? Don't be surprised if we come in tomorrow. We've got the measured move already accomplished. Two-legged pullback, do it again, right? That'll be the plan there for tomorrow. And then again, if it just keeps grinding lower, right? Anytime a market just grinds lower, don't sell low. Wait to sell with a trap, right? Because if it just pushes right to that measured move, it's probably hunting for that prior week low. I also want to point something out here on kind of the bigger picture on gold, right? And I'll use the 418 contract for this, right? If you look left on this right now, you'll notice we have kind of this big range down here, right? So this becomes a real, again, this is the 418 contract. So, you know, again, it'll be a little bit different prices here, right? But, you know, hey, we have the price right now around 1340, right? 1340 is the price right now. You know, oftentimes these prices come together, right? So I wouldn't be surprised here if we end up kind of digging into this range later on this week, okay? If not tomorrow. Okay, we get FOMC, we get rollover. There's a lot of variables here, but I'm definitely looking at, right, that kind of range down here, 1308, right? If I zoom all the way out here, you'll see it, right? You can see how, right, there's that range here, right? So we're gonna get sucked down to that range here. So putting that plan back together, right? Two-legged pullback, trap high, hidden channel, failure back down. Look for a possible, sorry, I'm running late here right now. Right, look for that possible two-legged pullback, right? Two-legged pullback into a failure, strength into pullback, going lower, right? Sell, sell, sell. And again, the objective is back down to retest that low. If it keeps grinding lower here, we know they're trying to go, get up off that low, trap, failure, back down, trap, failure, back down. And again, right, from there, we'll look for that rotation back up, right, and sell it back down from there. How do we turn bullish? It's possible. It's not probable right now, but it's possible. Strength, pullback, strength, right? If we can get that strength, pullback, strength going higher, we'll look for that new hidden channel, right? Look for those buying opportunities, right, in that sweet spot, right there between that high and the low of that channel. All right, target, of course, at that point, back up to retest the high. So roll over there for tomorrow on the gold, right? And then wrapping things up here on the euro tonight. And I realize I've been a little bit over my time limit here for you guys, so thanks for sticking around. Euro is bearish and trying to rotate back down to the low of a bear channel. But look at this push higher. It has so much strength to it that we can almost guarantee a second leg going higher here. So we're waiting now for that second leg going higher that will hopefully set up for us, right, some buyer failures up near that top of that range, right, and up near, right, the top of that or the low of that battle zone, right, for tomorrow. I would also say that because the day started off as a range here today, right, it did break free of that range. It was bearish pretty much all day today on the euro. But I'll tell you, this could easily be a pendulum swing, right? We got that range. Right, we swing outside that pendulum, right? The pendulum swings down. This could easily launch this sucker pretty much right back to the highs, right? The amount of the move lower is usually about the amount of the move higher, right? Now, how will we know? We'll know based on how this next leg higher looks. You can see a big clue here right now is this move higher. Right, that is a real strong move, right, going higher. You know, think of it this way. There was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, right? There's like a gajillion candlesticks that made that move down. How many did it take to go higher? 1, 2, 3, 4, 5, 6, 7. That's it, right? Like literally 50 candles to go lower, right, and 7 to go higher. So it goes to show you, I'm not saying it's a bull market yet. I'm just saying that the bears really had to labor to get this thing down, and it looks like they just said, we're done, right? And they took their profit to finish up the day. That resulted in this strong move higher. Anytime we see a real strong move in one direction, right, we're looking for that bust higher here, right, for a possible reversal. So as this market roars, if it just races higher, yeah, it's probably going to be a reversal, right? But if we can get something here that will give us maybe a two-legged pullback, right, get it back below here, use it, right, for a failure. Again, it all depends right now on kind of how this market feels as it's going higher. We have a good, strong move going higher here right now. I'm expecting to see another leg higher. Once we get there, do we see the buyers come over and fail, strength, and move back down, right? Do we get that pattern? Okay, nice and easy there, right? Nice two-legged pullback. Sell off that trend line, sell off the failure, off the pullback, right, back down. Easy selling opportunities if we get the pattern. Or does this thing just go, and go, right? Does this thing just running higher here in the overnight? If that's the case, then we know it's on, right? Then we know the deal. Draw that trend line up, find that channel, right? Two-legged pullback, and up we go, right? Use the top of that channel there, to the range there, right, for the move back up to retest the high, right? So again, one option is failure up around these highs, back down. That'd be great for the sellers, right? Get away from that measured move, finish off that, right, that leg back down. At the same time, though, does this thing just launch higher? And if it launches higher, right, do we get that chance here to be a bull? Again, strength, pullback strength, going higher from there. Do we go sideways, right? Do we go sideways? Do we come back tomorrow morning and see this market back down to those lows? Well, that solves all the problem, right? Now it's either breakout pullback from there, or it's range-bound market back up, one try, two try. At that point, there's no question about the bears in control, and look for a sell back down from there. So I'm expecting to see this market go higher here, right? Once it does, then we'll know more. Does it roar higher, right? Or does it kind of stumble higher? Right now, this market looks like it could be ripe for reversal, but we need to see more evidence here in the next few hours. Should be easy enough. All they have to do is be one more strong leg higher, and that's going to bring a lot of momentum with those buy side. It'd be difficult to want to be a seller at that point. We'll know more tomorrow morning. Again, look for the failure back down. If this thing goes back down to those lows, there's no question about who has control. At that point, it's either are we going lower for a move, right, down to a range low here, right, at 23,000. Very similar to gold. Right, we had that, right, the dollar talk, right, sent prices higher. There's that range, right, around that big round number, right, so be aware of that for a big target tomorrow, right, if these bears can keep this sucker going. Other than that, man, that's pretty much it, right? It's either going to be a range down, up, and sell off the highs tomorrow, or it'll be a range through, down to that prior range, right, 23,000, or one try, two try, failure back down, or strength, pullback, strength, and we're looking for buying opportunities, right, going back up, right, to retest these highs tomorrow. That is to be determined probably in the next few hours. So watch out for gold on that rollover. Be careful here as we go into the end of the month. And as always, I really hope this is a great investment in your time. I know the video's been a little bit long tonight, a lot to cover though. Don't forget, no newsletter tomorrow night. I'll make sure to come back and put up my next newsletter on Wednesday evening. All right, guys, so I apologize about that tomorrow. If you want another great investment in your time, don't forget our free trial here at schooloftrade.com. If you're on YouTube right now, there's a link in the description. If you're on the blog at Sideways Markets, there's a link over on the right-hand side of the website. Grab that free trial, learn all about what it means to be a client here at schooloftrade.com. We got beginner, intermediate, and advanced classes. We have a place for everybody. We have a great strategy, a great trade room, a great community of traders. All we need is you. Join the free trial, learn more there. Send me some emails. My email address is jj@schooloftrade.com. Use live support on the right-hand side, or post a comment below the video on YouTube. Either way, great to have you with me here today. Be well out there, be nice to each other, and be here next time. Adios, amigos.